Hello and welcome back to my morning report chart appraisals on Wednesday the 4th of February with me, Rich Pro Market Analyst at Tech Markets. Let's look at dollar yen, and I've been talking about this 23.6% Fibonacci retracement level comes in around 1790. We had 2 weeks basically where we were trading around that figure, and now we're trading fairly consistently below it. And not only that, we're sort of starting to pull away a bit and put a lot of pressure on that 1720 mark, which I'll show you in a minute on the intraday chart. But we had a couple of fairly indecisive candles in the last couple of days, but it certainly looks as though the chart is still not quite breaking down, but certainly you would be, if I was a betting man, I'd be on the just slightly bearish side of neutral at the moment, and just RSI is still falling away slightly, you could argue. That's annoying. RSI has fallen away slightly, you would argue, and also MACD lines very slightly, although stochastics are sort of pretty much flat. So not a huge amount being gleaned off that daily chart, but still, I think on the intraday chart you see a little bit better, where you see this throughout the course of this trading range. You saw these consistently, the moves coming above the 118 big figure level, which I still see 118 as a bit of a near-term, arguably a near-term pivot level. It has been used on numerous occasions through this chart, but again overnight we saw 18 big figure come in, and bang, that was the resistance, and that's now putting pressure back on the downside. And if I zoom in slightly here, you can see that 1720 again was forming a bit of a support overnight, but it looks like we're going to get a test of that again. So if we see 1720 breached, which I think 1720 seems to be coming under more and more pressure as we go on, and what we've also seen in the last few hours actually is a MACD crossover on the bearish side. The last one that we saw back was 3 days ago, which worked very well to the downside. So these MACD crossovers, and again here in this, I mean, this is still arguably a range play, and in these range plays you use the classic momentum signals. So you look for your bearish crossovers. So this one worked on the 20th, another one worked on the 23rd, then on the 27th, 30th, and now we're seeing another bear crossover, which could, as I say, now usher in a bit more downside pressure. So it'll be interesting to see how the bulls react to this, certainly with the support being almost tested already on that 117.20 area. So if we saw that loss, then you'd be looking at certainly 116.86 and also the low at 116.65 coming under pressure. But I still think just a very slight, very slight bearish bias to this daily chart, which I think just suggests we're going to put pressure on these lows around 115.50. Anyway, I wish you good luck in your trading on on dollar yen today, and I'll speak to you later. Thank you.